Jonathan, what do you make of the real estate market in India if you've been tracking that? Because the upper end of the market was doing very well, but at some point of time, the cycle was expected to turn. Do you see that happening now, or it's still a bit away?
Yeah, it's a part of the Indian markets which we sort of don't do a huge amount of work on, if I'm honest. We have looked at a few of the high-end developers previously, but obviously real estate of all industries is very localized. So it's difficult to sort of put a broad view on the entire space. But that said, clearly, some companies in certain pockets have done extremely well, as you say, more recently. But clearly, the underlying economy is humming along quite nicely, and yeah, certain companies in certain localities are doing relatively well, but it's not something we focus on too much.
Okay, so that's a take coming in on the real estate sector. In fact, let's hear out that conversation with the Godrej Properties Management.
The India story is finally playing it out. I think the leader in the pack has still now been NCR and Bangalore. But whether it's Bombay, which has started showing great volume and price growth this year, and Pune yet to show price growth but great volume growth, and some price growth already happening there, I think it's a very, very good time. On tier 2 cities, I think again there's a lot of latent demand, but yes, there's lack of good quality land supply and good quality developers operating there, but wherever you'll see that kind of opportunities available, tier 2 will do exceedingly well too.
And so this Dussehra and Navratri sales, how was it? Because we have seen the registration number coming up.
I think very early days because the festive season, as we call it, has just started. But I think the walk-in flow has been very, very nice, and there is a lot of, I think something about India during festive, everybody starts enjoying, and property buying is considered to be something very, very emotionally attached during this period of time.
Any new in H2, how many new launches you lined up, and which will be the significant one?
I think series of launches, from, we will finally launch a very massive set of series of action in North, starting with something in Golf Course Road. We're finally arriving there. I'm very, very excited. We bought a beautiful piece of land in the heart of Gurgaon, sort of a dream for the team back there. And then we have a series of launches coming in Noida, Bombay. We will open up a new phase in a very, very prominent project of ours, which is the highest selling project of Bombay till date now. We are opening some new launches in Pune, especially in Hinjewadi micro market. We might add a few more projects, in terms of the launch pipeline over and beyond what we were thinking initially. But yes, very, very excited.
Okay, that's the word coming in from the Godrej Properties Management. In the meantime, just take a look at what Prestige Estates is up to, for instance, because that's not been the best of quarterly performance from them. And you can see that the stock has been under pressure. They've, in fact, recorded a big drop in the second quarter sales. It's slipped to about 4,000 odd crore rupees versus 7,092 thereabouts in the previous quarter. And of course, collections though have seen an uptick of about 4% or so. But Jonathan, just wanted to get your sense on, the entire real estate market here in India. It's coming out of almost a decadal of underperformance, a very, very long spree at that. But where next? Would you believe that at least in the near term, the stocks are priced to perfection?
Yeah, I think you're probably right. Clearly, there's been a lot of money going into the real estate stocks, particularly the better quality ones. But, the overall structural story for real estate in India remains one of a country that is in desperate need of more building, particularly of more sort of low income type units. But obviously that's not necessarily where the developers are focused. So it is a very strong structural story. But obviously from a stock market perspective, whether the companies at play are playing into the bigger picture or whether they're playing into more regional and local, pockets of wealth, etc. So yeah, you've got to be careful in the stocks you're looking at, the land banks and everything else. So it is an interesting play, but as I said previously, not one that we tend to get too involved with.
Okay, so that's the take coming in on real estate. That's the pack that we are watching out for. But separately, there are a lot of earnings expected over the weekend as well. It's going to be HDFC Bank, Kotak Mahindra Bank, Tech Mahindra, which will come out with earnings. But before that, let me quickly take it across to Nuresh and get a chart check going in on some of these private banking names: HDFC, Kotak, Axis, ICICI. Within this four, what will be your pecking order?
Always has been the best performing one, and even now the stock has crossed a 10-day high. Unlike the other names, the first one of the block, so looks interesting. Next would be looking at Kotak Bank. It's been a long time the stock has not been able to cross above the 1900, 1950 mark. And post numbers, if it does that next week, then that would be a big confirmation. There have been many attempts around 1900, 1950 in the last 1 year. So watching out for Kotak post numbers if it can cross 1900.
Since we're talking about these banking names, let's take it across to Gaurav to get a sense as to what the earnings expectations are. Gaurav, begin with HDFC Bank's expectations from Q2.
Well, yes, when it comes to HDFC Bank, we are seeing a little bit of muted performance in this quarter as well. So when we talk about the brokerages and when we talk about the other analysts, what they're expecting is that net interest income may remain flattish on a quarter-on-quarter basis. When we talk about POP, which is pre-provisional operating growth, we may see a little bit of impact of high cost-to-income ratio, and that is the reason why we may see this also remaining a little bit of flattish. When we come to credit cost, now we may see a little bit of normalization in credit cost, and that is the reason why the provisions may go up, and that may weigh in on the profitability, and that is the reason why brokerages are now factoring in around 1% of a fall in profitability on a sequential basis. Although when we talk about on a YOY basis, that may remain flat. When we talk about advances and deposits, now we already know the numbers for HDFC Bank. We have already seen that HDFC Bank delivered deposits growth of around 15%, while advances growth remained at around 7%. And at the same time, when we talk about LDR ratio, that is actually one key thing to watch out for in HDFC Bank, because that was a reason, that was an issue which was highlighted by RBI as well. And now when we talk about advances and deposits, the implied LDR ratio comes to around 100%. So definitely people will be watching out on how the commentary comes out on LDR ratio, how is the proposition of the deposits. That will be a very important key thing to watch out for. But when it comes to profitability, they are not expecting any kind of uptick. Lastly, when we talk about net interest margin, which is an important aspect for HDFC Bank, we may see a little bit of flattish growth there as well, around 4 to 5 bips of growth, if not remain stable. So definitely watching out on how the number comes out for HDFC Bank. When we talk about Kotak Mahindra Bank, now we may see a little bit of uptick. Now analysts are expecting this bank to outperform its peers when it comes to advances growth, and in the numbers also it is reflecting. So advances growths are expected to increase almost by 4% on a sequential basis. Deposits growth may also follow the same trend, and because of these reasons, if we look at net interest income, there also we are expecting a little bit of outperformance if we compare it with the peers. Net interest income is expected to increase almost by 2% on a sequential basis. When we talk about PPOP, which is pre-provisional operating profit, we may see a little bit of impact of rise in cost of the spending of IT, because we know that there are some issues which are ongoing with Kotak Mahindra Bank, and RBI is also working with the bank. So we may see a little bit of uptick there, and that is the reason why we may see a fall of around 2% on a PPOP, and PAT will follow the same trend because they do not expect any kind of uptick in provisions to say. Apart from that, when we talk about net interest income, now we may see net interest income going down below 5% mark. We may see around a fall of around 5 to 7 basis points in this quarter, and the reason being that we may see deposit repricing in the bank. There is slowdown in unsecured lending, as we all know, in Kotak Mahindra Bank, and lastly there is some incremental funding growth coming from corporate and mortgage lending, and that is the reason we may see some kind of pressure in net interest margin. But apart from that, any kind of commentary coming up on the how the activities are going with RBI, how the progress is there, and lastly any kind of commentary on the tech spends is definitely a key thing to watch out for in Kotak Mahindra Bank.
Okay, a lot of earnings this week, and for the markets, we've managed to hit a 1-month low, and some of the key pressure points have been clearly Bajaj Auto all through and through. Kunal, just wanted to understand from you, where is it that you're seeing now moves within the auto pack? Bajaj Auto separately, but what about the recovery in an Eicher and say a Tata Motors?
I think Tata Motors could be an interesting bet at current levels, and the stock, I think in the last 2 months or so has fallen from 1150, 1170 to now I think sub 900 is what the stock tested today. So it's a good 300 plus point correction for Tata Motors, and I think after such kind of a sharp correction, we are seeing positive signs emerging. The stock forming triple divergence on the daily chart. It's fallen below the 200 moving average, but I think today's candlestick pattern indicates that we could be forming a base for the stock. Indicators are oversold. for Tata Motors. So I think purely in terms of risk reward, I would believe Tata Motors could be a very good bet at current levels of 900. My expectation is that the stock should come back to at least 1000, 1050 over the next 1 to 3 months. So I think from a risk reward play, this could be attractive. Maruti could be the other stock. I think the stock is almost at 12,000, 12,200 kind of a trading range. Again, the stock bouncing off exactly from its 200-day moving average. Today's candlestick pattern is very, very interesting. It's formed a bullish hammer pattern for itself on the daily charts, which means we could be looking at much more positive upside for Maruti over the next 1 to 2 weeks also. So from a short-term play, 12,500, 12,600 could be a target for the stock.
Maruti, Tata Motors both look good on the charts. But Jonathan, how are you positioning yourself for the consumption sector in India?
Well, I mean, just talking about the autos, we have some exposure to Maruti, but clearly, on the domestic side, particularly rural side, it's been a bit difficult for that sector. But then on the bigger picture side as well, I think clearly there's some big structural shifts globally going on in the whole auto space. So, it's a difficult area. China's clearly having an impact in many markets across the globe from an EV perspective. But clearly, the local competition is beginning to push back a little bit from that. So particularly on the autos, it's not an area we have some exposure, as I said, to Maruti, but we're quite select about that. Whereas Tata Motors, I think, there are ongoing issues with Jaguar Land Rover that keep us on the sidelines, in particular to that sector.
That's a take on Tata Motors, but we also spoke with analysts to figure out what's happening at Zomato, because that potential QIP has put a bit of a question mark as to what's the use of that fundraise, because they already have 10 to 12,000 crore cash on books. We tried to decode that with Karan Thorani. Hear out what he had to tell us.
The reason for this fundraise is very clear. One is, I think, they want to take advantage of the situation. Investors really want to invest in these high growth internet names. There is a lot of interest here. Swiggy IPO is around the corner. So I think they would want to make the best of this opportunity. The market opportunity is quite huge here in terms of expansion, in terms of scale. It could take everyone to a surprise in terms of what the kind of scale quick commerce market could reach, over the medium to long term from a perspective. So I think they want to be kind of well prepared for that situation as well. The third thing is that, of course, they want to have a bigger cash pile versus competition. That's what we believe. Clearly, if you look at Zepto's recent rounds of fundraise, they would be at close to more than $1 billion. Swiggy, has got about 6,000 crores, and with the latest fresh infusion from the IPO, they would also breach the $1.2, $1.3 billion mark, and that's where Zomato is today potentially. So, given the kind of market leadership situation that they have, both in the food segment and the quick commerce segment, I think if they're able to raise more money, and they're bound to have more cash versus competitors because of their size and scale.
So that's the take coming in on Zomato. Kunal, what's the take on the charts of this one, and what is your BTSC trade?
So Zomato specifically would not be, I think looking at the charts as of now, because the stock today is forming a bearish candlestick pattern. So my expectation is that maybe the stock could correct by at least another 5% kind of a margin. So maybe closer to 240, 45 could be a better levels to buy Zomato. In terms of BTST trades, I would look at two stocks. The first one is BEML, something which I highlighted in the morning as well as yesterday. Looks attractive. The stock is up 5% approximately. It's managed to cross above its 50-day moving average quite comfortably today. So would look out for targets in the range of 4,400, stop loss at 3,900. And the second is Wipro. My expectation is that the stock has completed a bullish flag formation on the daily charts, and this could be a very strong candidate of a breakout. Buy with a target of 600, stop loss 525.
Right. Naresh, what about your closing ideas?
So first would be a buy on Tata Steel, bouncing back, stop loss at 153, target price of 162. Second is a buy on ICICI Bank, clearly the leader in the banking space. Stop loss at 1250, target price of 13.
Point taken. In the meantime, take a look at Sundaram Finance. That stock has managed to perk up in the last few minutes. And SJVN is the other one which is coming up on my radar. That stock too has shot up, and it too can be said for Moscow Talk as well, holding on to decent amount of gains. But Jonathan, just wanted to get a better sense from you in the last few months and the kind of sideways move and correction that we have seen. Have you used the opportunity to buy something afresh or increase your exposure to any of the sectors?
Yeah, so it has been interesting how the market has struggled a little bit, pretty much virtually at the same time as we've seen new measures out of China, which has obviously caused some foreign investors to pull out and the index obviously to come off a little bit. I think probably from a foreign investor perspective, looking in at India, it still looks probably in the very short term a little bit pricey. So there's a little bit of uncertainty there. But obviously, you know, the message we always give to clients is this is a great market to be in for the long term. Consumption, those sectors will remain very buoyant. Yes, they're relatively expensive, but you know, there's a lot of structural growth that the underlying index can play into. And certainly when we continue to look at India versus China, there's a lot of attractions in India that we just are struggling to find in China. So yes, very short term, there might be a little bit of money coming out. But I think, you know, on most other time frames, it still looks very attractive.
Jonathan, since you did talk about consumption and a long-term view here, would you say that continue to have a bigger exposure to urban consumption or niche consumption, so to speak? Because, you know, rural consumption clearly has a lot more sensitivity to inflation.
Yeah, you're absolutely right. You know, I think where you can find consumption plays which are more geared into the urban sector, it does make more sense. And obviously, you know, yes, the rural sector is huge, but it is, as you rightly point out, more cyclical than what we're finding in the urban areas. And obviously, when you look at stocks that are geared more into the urban side, they generally trade at a bigger premium for exactly that reason. But yes, it is a very good sector to play.
That's the overall take on India versus China as well. It might be tactical, but for now we are seeing a massive exodus of money when it comes to FIIs. 75,000 already this month, much more than what we saw even in that COVID-impacted month of March 2020, and the highest amount of FII outflows that we have seen, at least in cash market, though DIs have been holding one end of the market. But clearly, there is that liquidity getting sucked out of the system. In fact, with that Hyundai IPO as well, we saw a bit of a deployment there. So that too might have impacted overall the liquidity in the system. But for now, the market is holding up at around 24,850 comfortably. The bank nifty is above the 52,000 mark at the moment. But Tata Consumers is also expected to come out with its earnings. Let me now take it across to Snehi to get a sense, because overall, Snehi, it hasn't started on a very positive note when it comes to consumption. Could Tata Consumer be a different story?
Well, yes, the street is expecting a good set of numbers this time for Tata Consumers on a consolidated basis year on year. Let's take a look. Revenue is expected at 4,340 crores compared to 3,734 crores, an uptick of more than 16% on a year on year basis. And new businesses like Capital Foods and Organic India are expected to aid top line this time around. You have EBITDA that's also expected to increase by more than 16.5%, coming in at 626.3 crores compared to 537 crore rupees. EBITDA margin is being seen at 14.8 crores versus 14.4 crores year on year, and EBITDA margin expansion is likely to be lower due to the higher A&P spends and the efforts on the distribution expansion as well. But let's talk about PAT, because that is expected to be lower, coming in this time at 314 crore rupees compared to 348 crores, lower by 10% on a year on year basis. And this is because of high interest expense and depreciation. These are expected to weigh on PAT this time around. Here are some key expectations. Then the salt business growth is likely to be steady. Domestic tea business is likely to see a marginal pickup driven by price hikes. Nourishco, Sampann and Soulful are likely to post strong growth as well. However, the international tea business is likely to post soft growth on a like-to-like basis. Some important factors to watch out for in these numbers: segmental performance in domestic business, update on the growth businesses as well as the margin outlook that the management is likely to give in its commentary. But well, yes, keep a close eye on these numbers. A good set expected for Tata Consumers this time around.
Okay, that's the take coming in on Tata Consumer. But Naresh, stack up some of these FMCG charts for us, from a Tata Consumer to an ITC, though not a pure play FMCG company for sure, Unilever, Dabur, etc., because a lot of damage has already been done after Dabur came out with its second quarter updates.
So after that downtick, it's become a case of a consolidation across the board. It's been a surprise because the rally was strong going from June to September, but now we are back to the same prices where it started from. So the only name I would still continue to like is Hindustan Unilever that crossed back into new all-time highs. and now at 2700 odd levels could say play a bounce back towards 2900. But rest of the names, it's a tough call to trade right now.
Right now, that's the view on some of these consumption names. But come tomorrow, it will also be Tech Mahindra, which comes out with its earnings. We are expecting an improvement in terms of earnings. Yet the overall expectation is a bit wide because the constant currency expectations for growth are anywhere between 0.2 to 1%. But we have a number closer to 0.3% in terms of constant currency. The dollar revenue is expected to be flat quarter on quarter. 1,572 crores is what, $1,572 million is what we are expecting. In terms of rupee revenue, it's a number of 13,240, which will be a growth of almost 2% on a quarter-on-quarter basis. Margin is something the street is watching out very closely this time. It's an expectation of a 70 basis point improvement. 9.2% is what the consensus poll number of EBIT margin is throwing up, and that will mean a profitability jump up of almost 20% this quarter, so that the number comes over 1,000 crore. Remember, last couple of quarters, Tech Mahindra has been marred by one-off issues. They had taken some one-off expenses. That's not expected to happen this time. Enterprise business is expected to lead growth, even though telecom might remain a bit soft. Margins will benefit from the efficiency measures. Plus, the overall mix of revenue has changed for the positive, so watching out for that. In terms of deal wins, $500 to $600 million is what Kotak is penciling in. So that's what we are expecting for overall Tech Mahindra as well. But shifting focus away from IT and then talk about what exactly is happening in the real estate sector. We played out what Godrej Properties had to say about the pickup in the overall Mumbai region apart from NCR and Bangalore. Let's hear out whether this is something which is corroborated by Tata Realty Management as well or not. Mr. Sanjay Dutt speaking with my colleague Anurag Shah.
Also, there's a lot of disruption going on internationally thanks to the war in Israel and of course in Ukraine, which has created a lot of opportunities for laborers to go overseas and work and at very good salaries and compensation. So what that has done is put a lot of pressure on construction. The impact of this would be that our projects may get delayed or may get impacted by cost. My rough estimate would be any delay of about 6 to 12 months can cause 2 or 3% erosion of return on investment for the investor or developer, and for the customer, the delays to occupy their homes or for an occupier to commence their business. So it has a huge business implication.
You said 2-3% on the project cost because of the delay in overall delay.
2%
Return, yes, sir.
The cost can go up by 10 to 15%.
How is the overall demand shaping up in real estate, especially in the residential real estate? And are you seeing the traction in tier 2, tier 3 cities also?
There is a very large demand. The economy is doing well. So obviously job markets are good, job confidence is good, people are creating wealth. All that is helping drive demand. So I think it will continue. Tier 2, tier 3 cities, the demand is even higher. And I think with the manufacturing taking place in remote areas, demand for the industrial worker will also be very significant going forward. So I think overall there will be a very high surge in demand which will continue. The main impact would be the prices and the cost and the time of delivery.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits and then break right through them. Become something more. It's my time to rise.